We're going to do a brief video on GBPUSD, GBPUSD Analysis Today. And we've got a daily chart on here for you with a 5, 20, and 200-day moving average. 5 is green, red is 20, blue is 200-day. Let's take a look back here real quick, see what's been going on. We can see here September 21st, September 8th, 2021, we had a violation of our 200-day moving average, and you can see here over the next month or so, we had a rollover. Next month or two, we had a rollover the 200-day moving average, and this British pound entered into a bear market. That's the British pound against the US dollar. This is the cash market, cash forex, not the futures. And we started our bear market, had great respect for the 20-day moving average into December, and got a rally that tested, almost textbook, tested the 200-day moving average as it started to roll over. You can see clearly that they started selling it again. We were still in a bear market. They used the 200-day for resistance and sold it, and began to progressively sell it harder and harder. You saw this fairly sharp decline. Keep in mind, we're in a bear market at this point because we've closed decisively below the 200-day. So they sold it, tested again, sold it again, and now we're firmly in a bear market. So this reasonably respected the 20-day moving average all the way down to this point here in May, second week in May of 2022. At that point, we started having people started thinking maybe this might be the end of this bear market. You can see they rallied it up a little bit, but you could tell by the distance between the 200-day and where price peaked that there was not a whole lot of conviction in the buying, and of course we sold off and got new lows. That's where we are now. We come down here and we take a look at it today, August 31st. We're making new lows for this bear cycle of 1.1598. We're significantly below the 200-day moving average, and as you can see, every time that happens, every time that happens, we get a rally to get some profit taking from these shorts. So I would expect you're going to see a rally in this currency here soon, not a continuation of a bull, but a bear market rally, and probably up here by the second or third week of September, we'll see a bear market rally up to the 1.20 level for this GBPUSD currency. I do not see them testing the 200-day anytime soon. The earliest test that I could look at on here and make any kind of reasonable prediction would be late October for a test up to the 200-day moving average, which should be around the 1.23 level at that time. Again, this is all my opinion, all for entertainment purposes only. We could easily get a continuation of this sell-off. We could get a hard sell-off. It's really difficult to say if that would happen, but even if we got a hard sell-off here, I would expect a rally after that, because this gap between the 200-day and price is getting too big. Again, anything can happen, and you trade at your own risk. Keep in mind, prices below the 5-day, below the 20-day, below the 200-day, we're in a bear market, so you want to be very careful. I would be very careful picking bottoms here, but assuming we can put in a little bottom, I do see that rally I mentioned earlier. Let's take a look and see what RBAM research says about it today. Our low is 1.15, and let's call the high 1.169. Let's go down and take a look and see what RBAM research says about it. We put out these algorithmically generated entry prices every day before 7 a.m. for cash forex, and you can see they have holding periods 1, 2, 5, 10, and 20 days. Those are worst case trading days, not calendar days. And today they're looking to buy. Each day you'll have a buy or a short, and today's the 31st. Looking at buys at 1.0003 on a 1-day hold, all the way out to 1.000371 on a 20-day hold. So let's go back here real quick and take a look at it, saying to buy, and or it's for entertainment purposes only, it's saying look at a buy, and this looks really let me see here, we're not anywhere near there. So this algorithm is very negative on this currency right at the moment, and I don't expect to get all the way down there anytime today. So but that's the prices it's giving. This for some reason it's picking up a negative vibe on these currencies and basically saying, hey, if you can't get them at a steal, stay away from them. So our algorithms are generating these kind of gaps between where we are and where they think it should be, and these algorithms are pretty good. So that would give me pause to try to pick a bottom here. And again, these are for entertainment purposes only, and you definitely trade at your own risk. You have to have your own analysis, and you can't use these for anything other than entertainment. But you can get these. They're fun to look at. They're published 7 a.m. Monday through Friday. Absolutely no cost, no credit card required. You can get everything at rbamresearch.com. There is a link in the description below, and we also cover 190 stocks. We cover the major forex pairs as I just showed you, BTC for crypto, and the major futures contracts. We put out algorithmically generated entry prices every morning before 7 a.m. Again, no credit card required, absolutely free, and a link in the description below to rbamresearch.com. If you like this video, please click the like button. If you want to subscribe, please do that. If you have a great comment to help us make these videos better, we'd love to hear it. Please leave it in the comments section below. And everything you've heard and seen on here, including entry prices, are for entertainment purposes only. It's all in our opinion, and you definitely trade at your own risk.